So let's get kicked off right here. So everyone, thank you very much for waiting. Welcome to today's Sovryn Tea. Thank you for joining us. My name is Magnus. And today at Sovryn, we're going to be joined by Robert Breedlove, Aaron Segal, Eric Yakes, and Eden Yago for what we hope will be a fascinating Twitter discourse. Ladies and gentlemen, don't forget that Twitter Spaces are interactive, and we will be taking questions at the end. So hang tight if you have anything, if you want to interact with our guests. Just wait till the end, folks. Okay, so to discuss today, we are going to be joined by Mr. Robert Breedlove. Welcome. He describes himself as a freedom maximalist and educates the world about Bitcoin and more on the What is Money podcast. He's also founder of Parallax Digital, a Bitcoin-focused consulting firm. Welcome, good sir, if you can hear me.
Hey guys, thanks for having me.
Yeah, absolutely. And we have Eden Yago, who's our co-host for today. He's a Bitcoin OG and early contributor to the Sovryn protocol. He's been in the space since 2011 and has founded multiple Bitcoin-focused companies. He believes Sovryn will play a crucial part in creating a world built on Bitcoin. Welcome, Mr. Yago.
Hello, and lovely to be here.
Yes, indeed. We also have Eric Yakes, who's the author of the new book, The Seventh Property. It's recently published about Bitcoin and the monetary revolution. He lays out an argument that immutability is a monetary property while providing a comprehensive and technical introduction to Bitcoin. Welcome, Eric.
Thanks for having me on, guys. Let's have some fun.
And also Aaron, as I understand, Aaron Segal, he has a flight that's been delayed, so he should join us in about half an hour. He's a hedge fund manager and writer for Bitcoin Magazine. Looking forward to having him on in a little bit when he gets off that flight. So guys, the title of this space is called Bitcoin, the Untold Story. We're going to be talking about all sorts of stuff, decentralization. But first, we wanted to just kick this off and see what's going on with our guests. So, Robert, we hear about your podcasts quite frequently. Would you like to tell us about what's going on with that and maybe what you offer with Parallax Digital? What does a Bitcoin-focused consulting entail?
Hey guys, so as you may have guessed by the namesake of the show, the What is Money show is really just an effort to do a deep dive on that question. And it's seemingly simple, but there's a lot of other questions that surface once you start to peel back the layers on the question of money. And the answer really to what is money, it's not a single answer. There's many, many answers, leads you down a lot of rabbit holes. And my aim really is kind of founded on the faith that if someone asks themselves that question consistently and they pursue the answers assiduously, that you'll come to find Bitcoin ultimately. So it's kind of a way of orange pilling people indirectly, where I'm not, a quote unquote Bitcoin podcast trying to evangelize Bitcoin necessarily, but just by asking these deep fundamental questions about the nature of our world and our socioeconomic reality, you come to see the importance of Bitcoin. Parallax is a firm that I had founded prior to starting the show. The show is only about 15 months old, so we started November 2020 when we launched with the Sailor series, which has been wildly successful and popular. I think we have 17 episodes with Michael Saylor, about 20 hours of content total, which is just a super interesting deep dive from one of the most brilliant minds, I think, in the world. And before that, so that was launched in late 2020. Parallax was launched in early 2017. We previously were operating a couple of crypto funds and was also doing some consulting in and around the space, somewhat focused on digital securities, but largely focused on really just Bitcoin, people trying to figure out how to integrate themselves, their businesses, etc., to Bitcoin, to move on to a Bitcoin standard, things of that nature. So, overall, I just consider myself to be a guy that's learning out loud and hopefully helping people learn as well.
Yeah, great stuff. We announced that you were coming on, and a lot of people, even in Sovryn, were really excited to hear from you and have listened to your stuff, so it's great. Just moving to Eric, we've been hearing about you with the Seventh Property book. This has just come out. Are you able to give us a little lowdown on what it's about, who it's for, what the message is, in a bit of a nutshell?
Oh, absolutely. I can give you the whole rundown. So look, I'm a newbie to this space. I'm not like Yago. I'm not one of the OGs. And, I'd been following the space for a while, and I decided to jump in towards the end of 2019, beginning of 2020. And when I decided that I wanted to get deep, I had to put together this, indirect curriculum for myself. And going down that rabbit hole of, reading all these different Bitcoin resources, reading different economic resources, essays, books, papers, going to far corners of the internet, I quickly realized, my background is in private equity, and I work for a corporate finance and restructuring group. And I realized that I didn't think that there was a good starting resource for people in finance. I mean, there's good resources out there, but nothing that was holistic enough to really answer all the questions that I thought could be put into a book. Which, when I started, I didn't plan on necessarily writing a book. I was just writing a series of essays so I could understand things for myself, and really quickly realized that it all ties together into a pretty cogent story. And I could definitely turn the thing into a book, so that's what I did. And I think the first question to, Breedlove's point, like the first question that anybody needs to ask before they can understand anything about Bitcoin is, what is money? And I start off getting into the theory around some of that. So a lot of people will learn about the properties of money or the functions of money, or that money exists across different dimensions. And when I was first getting deep into this space, that was something I'd never totally worked out for myself. I had an idea. It was given a cursory review in my, undergraduate education, but I wasn't super familiar with how to organize all of that. So the first chapter of my book, I organize all of that. And I say, look, there's money exists across the three dimensions, and then each specific function fulfills money, the ability to move money within one of those dimensions. And then there are certain properties that, while not being mutually exclusive, they will enable the ability to fulfill that function in a dimension. So I kind of intertwine all of that, and then you get a good idea of okay, so here's kind of the theory behind money. And then I jump into, so what's the history of money, and what are the salient examples that can really help us understand some of the key evolutions of money that occurred? And ultimately, one of the patterns that I point out is that we had this trade of trust for efficiency over time. And when you go back to, primitive forms of money, it actually had a lot of decentralized properties in these localized communities. It was, when you think about three primary ways that intermediaries operate within our, monetary system, the production of money, the storage of money, and the verification of money, that was largely decentralized in these localized groups, in that, people made money themselves, they were storing it upon themselves, and they were verifying it amongst one another themselves. So in antiquity, money was somewhat decentralized. And over time, we had these evolutions. Well, first we started to say, okay, well, governments need to mint it. And when through that minting process, we centralized the storage of money in government's hands, or the production of money in government's hands. And then the next evolution was when storage went into the hands of government, and so on and so forth. And now we're at the most centralized financial system we've ever had, and money's been fundamentally changed to a credit-based form. So I walked through all of that, and then one of the key things that was outstanding to me with a lot of the Bitcoin literature is people really didn't get into banking all that much. There was kind of high-level discussion around it, but I wanted to get pretty deep into that and provide people a discussion around, okay, so we understand money. Money is directly tied to our banking system, and when we think about how money flows through our banking system, there's quite a bit of confusion out there on how that works right now, because it's an incredibly complicated question. I think it's pretty complicated for a reason. But I go into the details of okay, so what was the history of the Fed? Why were there 3 U.S. central banks before the Fed? Why were there failures in this pattern of failure in other central banks that were predecessors to the U.S.-based model? And I go through that entire history, and then I get into, okay, well, here's how money flows through the system. Here's how it goes into banks. Here's how the banks get it out into the economy, and a lot of the implications around that, as well as a critique of whether or not the Fed is serving its purpose, or at a minimum is doing what it says that it's doing. And that's kind of the first story that I tee up before I start getting into Bitcoin with the book. And then after that, going into Bitcoin, I was like, okay, well, I wanted to thread the needle in a way to where you would get technical enough to understand the incentives of the Bitcoin system and in a detailed way so that you can explain that at a detailed level and not have to be operating on any sort of assumptions where you have to tell people, well, oh, just because that's how it works. You can actually get into details and you can explain those things. So I wanted to do that, and I focused on the incentives of the network. So I would say that my discussion around Bitcoin from a technical perspective goes deep into certain areas, but it's not the broadest resource you'd want to go to. If you want to understand everything about that, I would recommend Mastering Bitcoin, and then at the lowest level, probably Jimmy Song's Programming Bitcoin, but you need a developer background to really dig into a lot of that. Which is what I did in order to understand it, and I realized that, okay, well, there's a lot of concepts in this that can be summarized for people with a financial background so that they don't have to learn how to code and grasp some of this stuff. So that was a big piece of some of my writing around the Bitcoin section. And then, the final piece of the book is me tying that all together and saying, like, okay, now that we understand Bitcoin, how does it tie into this framework of thinking around what defines good money, and how is that going to impact our banking system in the future? And then lastly, I go through all the, most popular criticisms of Bitcoin and provide an explanation for those and have a discussion around, well, my ultimate conclusion is that while there are a lot of criticisms of Bitcoin are, usually due to a misunderstanding of how it works, but some of the criticisms are legitimate, and they are either going to get worked out through time or aren't, or they're enabled by an ecosystem, and they aren't something that will ultimately result in the failure of Bitcoin. So that's kind of the high-level summary of it all.
Okay, great. And it's funny you mentioned ecosystem at the end there, because obviously, well, with Yago and Sovryn and company, that's something they're working on. Yago, maybe could you delve into what's going on with Sovryn lately? We've been hearing a lot about the upcoming Zero Protocol, et cetera.
Sure. So I've been working on Sovryn for about a year and a half now, and it's been the most exciting thing I've done in Bitcoin, I think, over my entire time in the space. And for me, one of the key attractions to Sovryn is my sense of protecting and expanding what Bitcoin can do, particularly from the view of increasing Bitcoin's resilience, anti-fragility, and most easily understood, I think, it's decentralization. So most people, when they think about Bitcoin and its decentralization, they think about 51% attacks, and they think about running your own node. And those are, of course, very, very important things. But Bitcoin's defense needs to be defense in depth, needs to be defense in layers, because there are many other vectors of attack on Bitcoin. There's FUD, which we're all familiar with. There's altcoins, which I think we're also all familiar with. We've recently seen with the Canadian government attempting to seize Bitcoin from people who are attempting to transact through centralized services that, as Nick Szabo says, centralized services are security holes. And so decentralizing the ecosystem around Bitcoin and giving people access to use their Bitcoin in ways which go, beyond simply holding or transacting, but literally building an economy around it, is a big part of why I'm interested in Sovryn. And that obviously provides additional sovereignty to the individual, but it provides in the aggregate, and provides sort of, when many people are doing it, many tools around privacy and decentralization and self-custody, which actually protect the Bitcoin ecosystem for everyone. And so one of the cool things that I like about Sovryn also is that it's an extension of the Bitcoin protocol, which also increases the security budget of Bitcoin by adding additional transactions which pay Bitcoin miners. So maybe for the people who aren't familiar with Sovryn, who are on the call, Sovryn is a smart contract layer that extends Bitcoin's capabilities using Lightning Network and a Bitcoin sidechain. And it basically allows you to build any piece of the economy that you want but have it secured and decentralized by the Bitcoin ecosystem, and have the transactions paid to Bitcoin miners and using Bitcoin as the base asset for that system.
Just saw that Aaron's on the call. I just sent you an invitation to speak. So Robert, just expanding on this, what we're talking about, decentralization, key towards ensuring autonomy, et cetera. Do you have anything, to add upon that, Bitcoin being an innovation that uses decentralization and strengthen property ownership in an increasingly censored world, like we were mentioning?
I take a look at this, as we do on the show, like through a very large macro historical scope. And I think the key realization here is that, human beings live in a world, we have effectively unlimited wants, right? Everyone always wants more, no matter what they have. But we live in a world of scarce and finite resources, which is to say that the demand for more always exceeds the supply, right? We always want more, but we have to work to create it. So there's this intrinsic problem to living with one another, and that is we have to resolve these conflicts over scarce resources, who gets what. And there's really only two ways to do that. There's contract, which we can mutually, voluntarily come to terms of an agreement to settle who gets what. Funds are released, payment of some kind is released. Or the second mode to resolve conflicts over scarce resources is conflict. And that's, basically warfare, physical conflict, physical violence. Could also be a more veiled form, like we use politics. Politics have become extremely prevalent in the world today, as I argue, because the contractual mode of resolving conflicts over scarce resources has been largely compromised, and is largely compromised through fiat currency inflation. So to take this all the way back to answering the question, it's like, okay, we have to resolve these conflicts. We have contract or conflict as our means of resolving them. Well, the only way to make contracts work consistently over time is if they are decentralized, right? The rules of that contractual mode are decentralized, and that all humans are treated the same in the eyes of the law. And indeed, that's the aim of the tradition in the West, right? We're supposed to have rule of law, innocence until proven guilty, freedom of speech, all of these things, where we're essentially honoring that notion that was in the American Constitution at the founding of this country, which was all men are created equal. That has not been the case, right? The actual contractual enforcement body, which is the government itself, the institution put in place to preserve private property rights, which are the ultimate contract, right? That is your contract to the product of your labor or your past freedom. So, life, liberty, and property, these are just three different aspects of freedom itself. When those are closed, right, when for instance, we have a legal monopoly in the United States for central banking, that violates contract law. So every dollar that's printed, you could say, is a violation of this primary contract we call property rights. You're simply arbitrarily reallocating wealth from those holding dollars to those that can access newly printed dollars first. This destroys civilization, right? We have, again, two ways to organize ourselves, and it's by contract or conflict. If you screw up the contractual way of allocating those resources, you push people into conflict. And this is something Ayn Rand identified, decades ago. It's like if you break contract, you're going to push people into conflict, and civilization collapses. So I think that's what we're going through today. The contracts are being broken again. You see the animosity that's coming in the wake of that. We've got cancel culture, geopolitical tension, and just endless insanity in fiat world. And so now we're being forced as a species really to reevaluate how we're going to deal with this allocation of scarce resources. And, this is where Bitcoin is so important. It's the only property right or the only contract in history that no one can really break, right? It's just a matter of possessing information ultimately. It's almost transcendent of property in a way, in that if you consider property a legal notion, that it is dependent on an outside body to enforce the exclusivity of your relationship with that asset, Bitcoin's above that because Bitcoin has its own inbuilt rule of law. It's a property right premised on possession, if you will, or a bearer asset. So that is essential to civilization. If you want civilization to be sustainable, the contract we call property has to be decentralized. The rules have to be unchangeable. And we've just never managed to get to that point. We've been talking about inviolable property since the year 1215. It was signed in the Magna Carta, but we've never had a working implementation of that concept before Bitcoin. So, this is the whole game. This is the whole game for the future of sustainable human civilization, is creating this property contract that cannot be broken, corrupted, violated, changed, twisted. And we've simply never had it before Bitcoin. So talking about importance, I can't think of anything more important.
I just chime in on that. So I think I really like the way Robert describes it, because one of my things that I think happens too frequently with Bitcoin by Bitcoiners is the description of Bitcoin solely as a money or a store of value. And I think I think that that's true, but it is only part of the story. And in many ways, I think it, if we're going to be talking about the untold story of Bitcoin, I think in many ways it undersells just how phenomenal an innovation Bitcoin is. Because, going back to what Robert was talking about, contracts versus conflict, even in the world of contracts, there's always been a mechanism of enforcement for those contracts, and that mechanism of enforcement has ultimately been violence, or conflict, right? It's the government or the guy with the biggest stick, or the mafioso who run the neighborhood have always been the ultimate arbiters of any dispute that comes with a contract. And so we've always lived in a society which has been based on the logic of violence, right? So the sort of base layer, right? The layer one of our society has been enforcement by violence. And along comes Bitcoin and creates the first new type of property right since the invention of property rights, in terms of being fundamentally different. Fundamentally not based on violence for its enforcement, but rather based in cryptography and non-violent means. Fundamentally non-geographically based, in other words, designed for a globalized digital world and therefore accessible by every single human being, and fundamentally asymmetrical in terms of its power, because it gives the individual the power to protect their property through cryptography in a way in which even the most powerful nation state can't crack. So it's a remarkable innovation in terms of empowering the individual, creating reversing sovereignty, right? The sovereign has always been the king or the government. And now, for the first time, the sovereign is the individual. And the reason the sovereign is the individual is because what sovereignty is effectively the ability to mandate, protect, enforce property rights. And so that is a paradigmatic shift on the scale of millennia. It's as fundamental, I think, as fire or the wheel.
I think I think that's a good point. What I would like to add on top of this, when we think about Bitcoin in the context of other assets, in order for Bitcoin to transport a lot of those functions into property rights of other assets, then I think a very key consideration is the ease at which value can be moved between other assets in the world to Bitcoin, and that needs to be prioritized as Bitcoin gets built out is this new settlement layer for this new financial ecosystem. Because the more constraints and the more permission that's required in order to do that, it makes it much harder for people to operate with those, very major properties of permissionlessness of Bitcoin. The greater those constraints become, the harder it is for people to ultimately do what they want. And that is something that when I think, and we talk about what Sovryn's doing, and, I'm not as familiar with Sovryn, but in a lot of these enabling technologies around Bitcoin, that needs to be the number one priority, because people can't eat Bitcoin, they can't wear it, and they can't live in it. And we need to be able to export those properties to other assets in the most effective way we can.
Well, going off of that, Aaron, seeing as you're back on the call, right on the call now, I read a quote from you recently from Bitcoin Magazine. You said the global economy is driving toward authoritarianism, but Bitcoin offers autonomous decentralization that can save the average investor. Could you maybe explain some of your thinking behind this quote, how Bitcoin can save the average investor?
Yeah, sure. So quick caveat is I'm literally on a plane right now, and we are deboarding as we've been sitting here trying to de-ice this plane for the last, 2 hours. So if I'm a little distracted, pardon me for that. But I think, so I wrote recently, I think what you're referring to is I recently wrote a piece basically about this kind of drive in the 21st century between centralization and decentralization. I wrote this about a year ago. And it was, I work in finance. I run a hedge fund, and basically the premise was based on all of what I was seeing on the centralizing side of the scope here from a in the sense of a democracy. We often think of centralization and the forces of global centralization coming from nations like China with the CCP and things like that, but we're seeing a lot, of course, in most recent events in Canada are really speaking to this quite aptly, but we're seeing so much more of this right now here in the Western world. And it's not just from a geopolitical standpoint, it's how we're seeing centralization occur from the bottom up within the financial system. As we financialize the economies, more and more through the present kind of ratcheting up in a helix, we find ourselves in a kind of a path-dependent situation now where we're so dependent financially on financial assets over real assets that we are forced into a dilemma where we must centralize further. And centralizing in that sense, from a standpoint of financialization, is one in which there is more and more intermediation in financial markets, and therefore financial markets become less and less capable of delivering real economic signals. So, one thing I would just add, everybody just made so many amazing points about decentralization, but the only thing I would just add is one thing that's, I think, not talked about enough in the context of decentralization is the things it can do positively. So what I mean by that is that it's usually referred to from a negative affirmation, meaning what it protects. It protects against censorship. It protects against, well, obviously it's a kind of a counterweight towards centralization, which is often viewed in a negative context. It protects, as Robert was referring to, against violence. It protects people's property and rights, fundamental rights. But it also creates new things. So I was having an interesting discussion with somebody recently, and we were nerding out about game theory, and they were saying, well, what's really the difference between a Nash equilibrium and a Schelling point, right? Well, a Schelling point is a type of Nash equilibrium, right? So a Nash equilibrium is a situation where it's kind of a dynamic process where people are making decisions simultaneously. And an equilibrium is found when both participants have made a decision, or multiple participants have made a decision that they, once they find out what the other participant has done, would not necessarily renege on what their current path, their chosen path was. Now, a Schelling point is a type of Nash equilibrium whereby it's a little more complex. The system is more complex. So you have maybe multiple matrices of options, and that kind of speaks to what Eric was referring to. If you think about all those options as being like asset allocation potentialities, right? Like guys like Balaji have talked about this too, where you have the kind of a matrix of all the different assets you could invest in, and they're much more easily kind of interoperable, right, with one another. And that's a lot of what kind of Sovryn is aiming to accomplish too, but from the standpoint of the protection of the Bitcoin layer. Now, so a Schelling point, what's interesting about that and tying that into decentralization is that a Schelling point is when multiple, it's a Nash equilibrium whereby people are using trustless coordination. And trustless coordination only works with certain preconditions met. Those preconditions are free market, where people are free to choose and make those decisions. Because in order to arrive at that Schelling point, the common example that people use for Schelling point is that instance where people are trying to meet together in New York City, right? And they don't have any way of communicating, but they want to meet at some point in this chaotic city. And there was an actual study that was conducted whereby this happened, and people found multiple Schelling points throughout the city where they actually met. And it only took, like, I think 24 hours. A key one was the Empire State Building. And it was because there was a unique characteristic about that particular place why they arrived at that. And now that's often referred to with Bitcoin, because Bitcoin has all of these unique characteristics where as far as money goes, where we arrive at Bitcoin because of its properties, and we arrive at it naturally. But in order to arrive at it naturally, there needs to be all of these preconditions, like a free market. And very, very, very importantly, you need to be operating in a system that's more than zero sum. So a zero sum situation is where one person's benefit is another person's loss, right? But that negates the whole incentive for trustless coordination. And so if you have a system where the financial incentives are aligning such that there's way too much financial inflation versus real asset creation, which is productive innovation, then you create a situation that becomes zero sum, where the only way to gain is by taking from someone else. And then you start to lose the ability for people within that system to find a Schelling point. So what decentralization can do is it protects against that. And it allows us to constantly find Schelling points. And really what a Schelling point is they're everywhere in the world. And it's just decentralization at work, creating ways for people to find new, better forms of communication and forms of interacting. And it's just, that's what human progress really is. And so I think when we talk about decentralization and not just think about it from a perspective of what is it protecting, what is it defending against, it's also creating a lot of opportunity. And I think that's a really important thing that often gets lost.
I think that's such a good point, and I think comparing it to the contrast of zero-sum games is a great way of thinking about that. I was just making a similar point on Peter McCormack's podcast. I mean, when I was first going down the rabbit hole, everybody likes to focus on the negative incentives that ultimately would cause people to attack Bitcoin and how Bitcoin can defend against those incentives. But what ultimately sold me and what ultimately brought me to the idea like, oh, this is something where I'm nearly certain it just couldn't be stopped is when you think about the positive incentives and like to your exact points. I think that there is so much to be gained globally from so many different governments in the long run for a system like this, that is ultimately what's protecting Bitcoin from anybody wanting to try to stop it.
There's a concept which I sometimes think about, which is that I think a lot of the times we're not talking about scalability in the right terms, right? People talk about scalability, they talk about how many transactions you can do and, how quick the transactions are, etc. But I think that Bitcoin is already an extremely scalable system. in that it is scalable sovereignty. And so, like what Eric said, there are very, very strong drivers for countries to adopt Bitcoin. I think a lot of people throughout Bitcoin's history have expected regulation and countries to step in and try to, regulate it out of existence, and that really hasn't happened. And now, we see the Trojan horse game theory playing out with countries looking to introduce it to pay taxes or as legal tender, or try and regulate it and bring it into the fold or add it to treasury. And the reason that they're doing it is because it offers countries the same thing that it offers individuals, the same thing that it offers corporate treasuries, and the same thing. It basically offers any level of human organization the same thing, which is access to this self-sovereignty. So El Salvador now have access to a currency which isn't controlled by any other country, a sovereign currency that they can use. They have access to the ability to raise $1 billion, which apparently is already oversubscribed, in a bond market which doesn't go through London or the gatekeepers of New York. And that is a new kind of sovereignty. It gives them access to a financial system which isn't controlled by any other competing country or the IMF. That is sovereignty for a country in exactly the same way that it's sovereignty for individuals. And I think one of the things that's going to happen with a high likelihood is that when the country of El Salvador raises $1 billion in a bond at better rates than what they would be able to get on traditional financial markets or from the IMF, we'll start to see the same kind of FOMO that we've seen play out with retail, and then afterwards with institutional investors play out with countries as well. Everyone's going to want to get into the game, and they're going to want to get into it as early as possible. And so in terms of, positive things, I think that is already happening. The game theory, so to speak, is playing out. The Schelling point is there.
I can step in until he comes back. But yeah, look, I think that, that it's a great point about El Salvador, what that's going to be signaling to the global markets. And, I think one of the benefits of El Salvador being as small as it is, if El Salvador is the size of a very large company, nearly in terms of GDP. And when we think about the impact that it bringing such a large-scale asset of Bitcoin to its economy at this point, the amount of resources and capital that it's ultimately going to attract, I'm very optimistic on that. I think you have to be measured, and you have to understand the risk to property rights of moving to a country like that. But nonetheless, it will be positive. And just speaking hypothetically, if El Salvador's GDP were to double, which would be an easy feat if a few large companies decided to move there, then that would signal a very rapid domino effect to global economies. And I think you'd see that start to occur in a much faster pace.
And for our guests, is there anything that's, we're looking at El Salvador, we're looking on a macro level. Is there anything that you think like the Bitcoin community developers should focus on? Is there an opportunity or something that they're missing out on?
Robert, I'd be interested in your thoughts.
I'm sorry, guys. Could you repeat the question? I don't think I caught all of it.
Yeah. So, for instance, one of the things we've been looking at, like the positive things of the decentralization, et cetera. A lot of the questions we've had focused on from our community is, what do you think the Bitcoin community developers could focus on? Are there any opportunities that we're missing out on?
Well, in the wake of this Canadian situation where the government, I'm sure everyone here is well aware, but basically Canada went from a ranking of number 5 on the Liberal Democracy Index to effectively a martial law authoritarian regime in the span of 2 weeks, to the point where bank accounts were being frozen, seized, etc., for not only those involved with the trucker convoy, the freedom protest, but also those that donated to it. That's very unnerving, to say the least. So everyone despises fiat currency. I think there's no question about that, in terms of it being a it's morally repugnant, right? It's got theft integrated directly into it. It's prudently a disaster. No one wants to hold fiat currency as a savings vehicle, especially in the expansionary situation we're in today. But all that said, I would say most people are still trapped in this game to some extent, right? Like I know I myself, I have fiat denominated bills. I have real world expenses I have to pay, and I have to pay them in US dollars. So the pain point that I see right now for myself is, okay, I hold some US dollars. I hold them diversified across a number of bank accounts, which hopefully offers me some degree of protection in the situation like Canada just went through. However, that's not my preference. My preference would be to hold dollars or a dollar proxy totally independent of the banking system in some non-custodial way. Now, clearly you could do this. You can take cash out of the bank to some extent. You can stuff it under your mattress or bury it in your yard or whatever, but a lot of these solutions are not practical. So I've heard some talk of startups working on basically like Bitcoin-backed stable coins, right, where they peg to the US dollar or whatever your local fiat is via some market mechanisms, but there's a Bitcoin backing to it. Now, I don't have depth of knowledge on this to speak to it really intelligently, like as far as technically what needs to be done, but I think there is going to be increasing demand for sovereign, let's call it self-sovereign solutions for stablecoins, effectively, because for better or worse, I have to deal in dollars today. I'm probably going to have to deal in dollars going into the future. It's going to take a long time before Bitcoin is widely accepted and deeply understood. I would love to be able to bridge that gap in a trust minimized way, something that's accordant with the ethos of Bitcoin. That's not necessarily, that perhaps isn't something necessarily directly about the decentralization of Bitcoin itself, but it is a feature of life that I would like to experience in a more decentralized way as we move towards a more hyper-Bitcoinized future.
So, I think the way that I think about this question, I think it's going to take a step back and be like, okay, so where are we at right now? We got base layer money figured out. We've innovated that, and we no longer have to deal with this trade-off between trust and efficiency. We've created something that's more efficient and trustless at the base layer. Now we have to build that out on the next layer for payments, and we have to expand permissionless payments to the world, and that is something that requires a network effect, and that's something that's going to take some time. And then, when I think about building out beyond that, then it's like, okay, well, we need to have the ability, the same way that money allows us to move value forward in time, credit allows us to move value from the future to the present. And that's a fundamental function of an economy. Is Bitcoin going to change that significantly? Absolutely. Credit is massively expanded, and there's significant malinvestment all over the world. I had quite a bit of experience with it in my prior work. But will it still exist? Absolutely. There is a need to bring value to the present. And, when people need to start something that requires a certain scale that they haven't saved enough for. There's a variety of situations where on a risk-adjusted basis, people would want to lend them that idea. So when I think about that expansion, that requires, we need to have all the current financial products and services that exist in our traditional system. Those all need to be replicated in this new system, and they need to be done at the same ease, at a minimum at the same ease, if not better, than how they currently exist in the traditional system. And in order to bring over, major capital allocators, I think that it really requires that sophistication to exist. And I'm talking about, basic functions. So now we have custodial solutions. Those are being built out. There's not a ton of providers out there, but there's a good amount. We have lending solutions expanding rapidly, but not a very clear regulatory environment around some of that. And then the ability to audit those situations is not great. So that needs to improve pretty significantly. But then we get into the markets of insurance, Bitcoin-based insurance products. That is an area that largely hasn't been addressed at all, to my knowledge, and is probably, I'm sure there are people out there working on that right now, but there's nothing that I've seen in the mainstream. So on and so forth. There's all these different functions of financial products and services that all need to be replicated. And I think we're going at those one by one, but I think one of the problems that the ecosystem is going to be running into is putting the cart before the horse on some of this stuff. And I think that there's probably a lot of disagreement within the community around that, and rightfully so, because this is a major innovation. It's as if anybody knows how these things should be built out is a really debatable question. But nonetheless, I think that the payment problem does need to get solved. And when we get the payment problem set up, then the financial products and services can come at the same time. But when you bump into the chicken or the egg issue is, okay, well, how are we going to get more capital in the space without Bitcoin reaching a greater amount of scale? Well, a lot of people aren't going to invest that capital until we do have like mainstream products for financial services that are at the ease at which they expect in the traditional system. So it's almost as if some of this financialization really does need to come first to a degree. In order to attract more capital, in order to expand the scale of Bitcoin, in order to reduce the inherent risk of it and increase its network effect. So, to get a bit more precise around some of that, I think that a lot, when we go through this next cycle and we have a lot more sophisticated capital allocators that are considering investing in the space, we need to attract a lot of that into Bitcoin-focused companies, which means that what's attracting capital allocator to the crypto world, to the NFT world, that's a lot of the financialization products that are coming. And I think what Sovryn's doing and some of these other companies, if they can figure out these problems, back to my earlier point, where Bitcoin's immutability and the ability to settle in Bitcoin can be moved into at ease through these products, whether regulations come or not, then that is the ultimate crux of the issue that needs to be solved. And if we can keep working on that, we can use RGB, we can use DLCs, we can create these smart contracts that can allow us to replicate these financial products and effectively make a lot of crypto just this outsourced R&D sector for us. I think that's massive, and I think that's kind of the goal, and I think that that's what we want. And when these products become very effective, that's when the capital will start to flow in. That's when Bitcoin-specific VC funding is going to go from whatever it is, 2 to 10% range. People are estimating to to a much larger percentage of the total crypto VC investment. And so I think that's probably the most critical thing to be focusing on right now.
So I really like the answers that you guys gave, and I think I also have good news for you. So, Robert, with regards to Bitcoin-backed stablecoins, I completely agree that is a crucial step that we need to take for a lot of reasons. It's a way to give people access to a way that they can spend on their daily needs without having to go through a centralized player. It's a way that they can make sure that they always have enough money for 3 months of rent or whatever it is, even if they're all in on Bitcoin. And it's a way of creating decentralized stablecoins and effectively competing with the Fed in terms of issuing dollars. And in that respect, it is important from a decentralization perspective, because I think that's exactly an example of decentralization in layers. If people can use their Bitcoin as a dollar-denominated asset as well, then that further removes them from the need to go through centralized parties and further protects their ability to use Bitcoin under almost all circumstances. So Sovryn already has a first version of a Bitcoin-backed stablecoin, but there are very big changes that are coming probably by April, which are going to, I think, significantly improve Bitcoin-backed stablecoins. And one of the big improvements is the ability to use your Bitcoin to create dollar-denominated collateral. So basically to borrow against your own Bitcoin, to borrow from yourself dollars by collateralizing your Bitcoin at 0% interest rate into perpetuity. And so the idea is you would have, eventually you'd be able to have like a debit card. You go into a store, you buying your groceries or you're paying your rent, and you do it against your Bitcoin without ever having to sell your Bitcoin. And the only interaction you have with the fiat world is at the very, very last mile, right? When the shop receives dollars, then they're receiving dollars, but you didn't have to touch the dollar system at all. And I think this is much, much closer to reality than most people realize. The vast majority of this has already been developed by developers who are working in the Sovryn ecosystem. And right now they're putting the finishing touches on the UI. So I'll shoot you a DM when it's ready to test out. I think they want to start inviting alpha testers soon. So Robert, I'll invite you. And also, if anyone else who's listening wants to be invited, you can just DM me, and I'll try arrange for that. And then with regards to what you were saying, Eric, I think you're completely right that we need to build these financial tools, because if we want Bitcoin to succeed, people need to be able to use Bitcoin. It needs to become this live asset rather than just a savings asset or a store of value asset that you HODL. And so I think that's a big part of why so many of the projects that have been developed in Sovryn are financial, lending, margin trading, derivatives. The futures market that was developed by devs working on the Sovryn ecosystem started inviting people to test it at the beginning of last week. So Sovryn's been moving very quickly, and I think the community has a philosophy very similar to yours, Eric.
All right, everyone. So it is time to get some. Oh, sorry. It's time to get some audience questions. I've seen some requests coming in earlier. Guys, just put in requests to speak if you want to ask something for awesome guests. In the meantime, while we wait for requests to speak, I got a Twitter question from recently Orange Pilled. He said, can you please explain the halving cycle and its effect on BTC value? Is anybody able to answer that? Perhaps Yago?
I can, but I actually think that probably Robert has a better way of explaining it than myself, based on how I've heard him describe previously.
I'll do my best to keep it simple. I should say too, I've got to jump in about 3 minutes. I've got a call, but I really appreciate you guys having me on today, and I look forward to checking out what you guys are doing, Yago, because there's a lot of pain points that are unresolved in Bitcoin for me, as I'm sure there are for others. As far as how the halving cycle affects Bitcoin, I mean, I think the simplest way to think about it is supply and demand. Where supply and demand meet is price. And when new Bitcoin is issued in each halving epoch, like right now we have 6.25 Bitcoin created per block, a lot of that Bitcoin is being sold to pay the operating expenses of miners. So that creates basically significant selling pressure. There's significant supply being sold in the marketplace to pay the bills of miners. When a halving occurs every 4 years, that new issuance, which is called the block subsidy, it contracts by 50%. So I think it's in May 2024 is the next one. We'll contract from 6.25 Bitcoin per block to 3 1/8. And essentially, at least the theory is, I would say this is a theory that's been somewhat proven, but, where we stand today, I don't know, Bitcoin seems to have perhaps broken this halving cycle, is that when you reduce the supply being sold on the market by 50% and hold demand neutral, that basically puts upward pressure on Bitcoin price. And indeed, that's what we've seen play out over the past 13 years, more or less, is that you have a halving, and then I think an average of 510 days after the halving, you have a new Bitcoin all-time high price. That would be excluding the most recent cycle. We did have a new all-time high price. I don't think it came in at 510 days after, though. I think it came sooner, much sooner actually, because we hit 69,000 earlier in the year. So that's it in a real simple nutshell. I hope that helped.
Yeah, to add to that, I think when people look at this, Robert explained it really well, and there's the supply side. And in finance, there's a question between when information is known and when it's not. And, you could probably argue that there are a lot of investors in the world of Bitcoin that before this whole idea of the halving cycle became mainstream were investing based upon that. And they were predicting, okay, all else equal, if demand stays neutral, that if the supply gets cut in half, that is good for the price and the price will go up. And they were probably trying to anticipate that. But once information is known by the market, that's when everything changes. Once this became mainstream, that's when this whole theory changed. That's when it became something where when you think about people on the demand side, this assumption of if demand is neutral, that changes once everybody becomes aware of this narrative. So demand is no longer neutral. There's a group of buyers out there, a very large group of buyers out there who are speculating. And they're using information to speculate on the future price of Bitcoin. So once this information became mainstream, the nature of those speculators fundamentally changed. And I think that's a simple way of making the argument for how demand probably was much more rapid on this halving cycle than we expected, and then also how it dropped off much more quickly because the speculators tried to anticipate it, and then they got out because now it's just mainstream knowledge and it's factored into market considerations.
Okay, brilliant. Thank you, Eric. Now we have Martin.Adrian. If you'd like to ask your question, go ahead and unmute yourself. You have the floor.
Yeah, thanks a lot. Thanks for the discussion. Actually, on this point of the halving, I'm kind of wondering what you think about. There's this idea that Bitcoin is accessible to everyone and that it's the perfect form of money. Because of its decentralization and because it's it's kind of this conflict-free, coercion-free protection of ownership, right, and property rights. But there is, of course, this element of time, and if you look at things diachronically, there are some kind of contrarian points to be made there. I mean, so you might say, look, we shouldn't forget that first of all, you need an internet connection to have some access. You need to have heard of it, so you need to be sort of connected to sort of information channels, right? And then how that matters is that if you take a given quantity of Bitcoin, and given that you need sort of capital to access that, right, or work. But you need some means to access that. You need to have heard about it. You need to have an internet connection, etc. Some people are going to be late. Some people are going to be early. And isn't this OG-ness, this being early, time spent holding Bitcoin, in a way a form of inequality? And might want to argue that it's one of those sort of security holes that Yago mentioned at the very start. Right, so you might say that, look, a given quantity of Bitcoin becomes less and less accessible over time because fewer and fewer people will have access to that given quantity of Bitcoin, and that is part of the reason why people are attracted to altcoins, right? Because they get to be early and they want to be early, and there's a form of coercion in that, you might say, but because there's a form of coercion in being forced to profit other people. And of course, if you're late, then you're pumping someone else's bag. So you're kind of, as time goes on, you'll be pumping the bags of more and more people. So you might say you're implicitly sort of coerced in profiting others to gain access to Bitcoin. And I'm playing devil's advocate here, but I just want to sort of see you guys speak to this sort of more diachronic cross-time perspective on access and it being coercion-free. Thanks.
Eric, you want to go first?
Yago, you can go first if you got some. That's fine.
No, please.
Okay. You were cutting in and out a decent amount, so it sounds to me like the point that you were getting across is that when there is an incumbent asset, as the market starts to saturate, there is an inherent inequitability in those who are first versus those who come in later. Is that kind of what you're getting at?
Yes, not just in it, but that's sort of being the basis for a possible security hole. Right. So people because of that, they will have to profit others in order to access the network, and because of that, they will prefer not to and go somewhere else. So I'm just thinking of sort of accessibility over time as a security for it.
So from like the security perspective, I think that you eventually some people have that mentality, some people don't. And I think the people that do, they ultimately just have to learn over time that the network effect is starting to consume value in a certain area. I think you can apply this argument to a variety of different things, but the point that I would make is that this, number one, before saying anything else, number one, this is a reality of any asset. I don't think this is something that's specific to Bitcoin, just because Bitcoin it's growing so rapidly and it has such a large addressable market. I think that makes people point this out inherent in Bitcoin, but it's true of anything. What about all the original tech investors who happen to be in a certain area and happen to have friends who understood certain things? And then even sometimes it doesn't work out. Doesn't work out nearly as well. I mean, if we expand the scale of time and we look back across the world, we can say, okay, what is the highest resource endowed continent in the world? Africa. What is the where do we where did the majority of people initially begin evolving from? Africa. Now, is Africa the most radiant economy in the world? No, things ended up turning out very differently when people migrated away and started coming back and extracting resources from it. So I think that it can get complicated, obviously, and there's a lot of ways you could look at it. But I think the timing piece, and it's one of the big pieces of uncertainty around Bitcoin. But typically when you see these infant assets, you can look at like the Gini coefficient argument, and that, they start off in a highly inequitable way, and then that equitability starts to change over time. And the exception to that is, I think it was called like the Latin America effect, and there are certain regions of Latin America that don't follow that exact curve. But in a lot of economies, you can see that. And I think that with Bitcoin, one of the things inherent to Bitcoin that is different and would make it an exception is just the fact that it is immutable, and it is something that, ultimately people who were early, they are going to benefit from distributing it to the system gradually over time. And I think that while they're early and they will benefit significantly from that, I think that also is something that these are people who are risking a significant amount of wealth over something that had a very high degree of unpredictability, and they supported the emergence of a new global monetary network. And I think in hindsight, when you look back on that, and when it's in history books, people will be like, okay, these were some of the original people who started to really push this crazy, radical new idea that fundamentally changed the world. And you'd be like, yeah, of course they got rich. But that being said, I think that a lot of those issues will resolve themselves over time, because people can't eat Bitcoin, they can't wear it, and they can't live in it.
I would simply say that Bitcoin is an asset that you can be early to, but you can't be late to. And it's just like gold in that respect, right? Nobody thinks of themselves as late to gold, even though we've been using it as a means of exchange for 5,000 years. But there was someone who was early, and that person took on a lot of risk, going and collecting a whole bunch of gold, and then he had to convince other people that this stupid metal was valuable in some way. So you can be early to Bitcoin, but you can't be late. And the people who were early took on a huge amount of risk and had to innovate a great deal. To your question about whether or not this is a security risk, again, like with gold, having a lot of gold doesn't give you the ability to create more gold. It doesn't give you the ability to confiscate other people's gold. It doesn't give you the ability to change the rules of gold. Bitcoin is exactly the same in that respect. Having a lot of Bitcoin doesn't give you any power over any Bitcoin except your own.
Very good. All right. So, David, I see you're ready for a question. You have the floor as well.
Cool. Thanks for doing this. I had to drop off for a little bit, so I apologize if you covered part of this question. But I have a question, and then I'll kind of explain it a little bit. My question is, what is your opinion of the role of credit in a Bitcoin economy? And specifically, when I look at history, I believe that gold's failure is not a result of its inability to be effectively sent through time and space, as many Bitcoiners often say, but instead because the only way to issue credit on gold was to have it custodied by central authorities. And so the overwhelming demand for credit, which is really what caused the Eurodollar system to be born, is the true risk of hard money failing, in my opinion. But with DeFi, we can allow anyone to be the creator of their own credit on top of their own Bitcoin with their own custody. And in doing so, we kind of disempower these gatekeepers, which are the credit creators. And so this flips the paradigm from this top-down approach to this bottom-up approach, where we create a distributed system of individuals creating and allocating their own credit as opposed to centralized custodians creating the credit. So I really want to hone in on that idea that I think credit is the ultimate failure of why money has failed in the past, not these other reasons that Bitcoiners ultimately purport. So if we could riff off that kind of idea of the role of credit in the Bitcoin economy, that would be great.
So look, I mean, credit creates ease within an economy. So when there are certain scales and plans and projects and capital and resources that need to be created at a given point in time, and the amount of savings of a group that plans to do that isn't enough, then credit creates ease for those ideas to be allocated. And then when people, you're arguing for how that'll exist in a decentralized way, and I definitely agree that that allocation at a more localized level will be a major, major shift this direction. You know, that being said, I think that people do naturally centralize, and people do naturally form hierarchies, and people naturally try to find efficiencies. And credit is something that requires a significant amount of due diligence and specialization in order for people to apply it effectively. So by being more localized, you benefit largely from that, because the localized groups are much more aware of one another, their specific situations and their plans, than centralized entities are. So at one level, it reduces it through localization, but there's also another level, and I think this will occur in more complex areas. Complicated capital projects require significant due diligence to go into affecting those. And people only lend to those with significant expertise within that particular area. So localized groups will probably not be as effective at that. And I think that the centralization of people who are allocating credit will still exist for reasons like that, but I think it'll be significantly reduced.
Great. I think that makes a ton of sense, especially on the kind of centralization when it comes to like allocation of capital. You know, I still think there's something there about even people who aren't going to allocate credit, but maybe just want to use credit to kind of leverage their Bitcoin. It still kind of disempowers those central authorities, those central credit creators. But otherwise, I thought it made a lot of sense. So thank you.
Totally, man. Thanks.
Yeah, we had a follow-up question. It said, in your opinion, what are the best interest-bearing investments for BTC and or USDC, if any?
I'll leave that to Sovryn. I think you guys are the experts in that area.
The best interest bearing? Well, I mean, I think it's a very complicated question because it really depends on how much risk you're willing to take, right? So you can go down the sort of ranks of centralized lending services, and sort of like the smaller ones who are willing to take more risk can give you more interest on your Bitcoin or more interest on your USDC than others, right? So yeah, for a while when they were trying to grow, BlockFi were offering very, very high interest rates, and then turned out that the way they were doing it was taking advantage of an arbitrage trade, which blew up in their faces. And Celsius, turns out that the way that they were doing their interest was by generating yield with your money in DeFi, and then they lost a whole bunch of money on the Badger DAO hack and et cetera, et cetera. So risk-adjusted returns is really what you're interested in, I think, all right? Especially if you're talking about your Bitcoin, because Bitcoin is first about wealth preservation. It's about how you can secure your wealth, how you can control it yourself, and only then is it about growing your wealth. But the most powerful force in the universe, said Albert Einstein, is compound interest. And so, for example, in Sovryn today, you can earn about 8% compound interest on USDC, and you can earn about 2.5–3% compound interest on BTC, fully collateralized, fully transparent, fully non-custodial. And a pretty simple trick is to, I think it's the rule of 72, maybe someone will correct me, but basically you take a number divided by the interest rate divided by 72, and that tells you how many years it will take you to double your money, or double your Bitcoin in this particular case. So a bunch of people at Sovryn are working on ways to maybe even increase that in a fully over-collateralized and transparent way. Increase the yield you can earn on your Bitcoin. So for example, there's a futures market coming out now, which could potentially offer substantially more than 3% annualized. But yeah, I one of the reasons I don't use these centralized services and got really into Sovryn when I heard about it was because I'm not willing to risk my Bitcoin with centralized services, which can go bankrupt, where you have no recourse, which can have your funds confiscated, which can get shut down, where if they get into a legal dispute, the funds get frozen. Yeah, to me, the risk-adjusted returns that just don't make sense.
Yeah, to his point, it's a hard question to answer because this is something that's an individual decision, and what I'm about to say is not financial advice, but it's something that needs to be done individually. So the way I could answer it, not with names necessarily, is if you're thinking in the direction of like centralized lending platforms that are more accessible at this current point in time for the average user, you want to look for qualities like something that has a large user base, has good insurance, they have like an audited proof of reserves. They have, obviously you want the yields to be as best they could be, and then having, some form of good customer support. You want to look for like things like that. And it requires everybody to do their own due diligence. And this is a new market, and it's very risky, and we don't know the direction it's going. So these financial products are very risky, and you need to understand that.
All right, guys. So that pretty much wraps it up. We've got all our questions in. Just want to say a massive thank you to Eric for joining us, as well as Robert Breedlove, and also Aaron Segal for a little bit. Guys, don't forget to follow all of them on Twitter if you can. Robert is at Breedlove22. Eric here at Eric Yakes. And of course, Sovryn at Sovryn BTC. You can follow us on YouTube and all that jazz to get up to date with what we're doing. And thank you very much for joining us wherever you may be in the world. Thank you to our guests.
Thanks, guys.
Thank you.
Bye, Bitcoin.
All right, guys. Thank you very much. Remember, stay sovereign. Have a great evening.